All right. Well, good afternoon, everyone. Thanks for joining us. We have a very well put together deck here about the financial cycle, financial hygiene. And with us today, we have Adam Canosa from Grassi. And we have a lot of stuff to share today about, the different departments, different, operations versus accounting, what pitfalls we may see around the kind of accounting cycles, but just wanted to talk a little bit about how we can make the most of, the different data points that we're going to be tracking for, our monthly processes, whether it be the WIP, whether it be forecasting, even down to cost entry, revenue recognition. So let's do a little bit of introductions here. First, my name is Denver Sperry. I'm with ProNovos here. We are a financial intelligence solution that connects to all the different ERP systems out there, like the Sage Suite, Vista, Foundation software, QuickBooks. So we take a lot of the data from the accounting system, create some analytic dashboards, workflows such as, the WIP report, forecasting models, and just really trying to empower the end users to be able to do more with the data that they are tracking within the system. And like I said, also today we have Adam. Adam, if you want to introduce yourself here.
Thanks, Denver. Adam Canosa. Nice to meet everyone from Grassi. Denver, you didn't do it justice on the intro. You got to say that we're analyzing. We're going to be focusing on the why and not the what. Denver
That's
and I
right.
were going through this. We spent some time kind of brainstorming where people spend a lot of time, and I really liked his idea of that, which we kind of layered into this presentation. And that's kind of the financial hygiene is what started this, but the identifying the why in your financial cycle over the what in your financial cycle is really what we're going to try to deliver in this. My background, I'm a CPA by trade. I'm heavily involved in Grassi's advisory construction practice. We work a lot together with Denver and the ProNovos team. We work through making sure that, the operating teams and the finance teams are seeing things consistently because we all know finance is historical, operations is always looking 2 weeks ahead, 3 weeks ahead, a month ahead. So there's a lot of time that happens within ops and accounting, and where we spend a lot of time and where I think the purpose of this presentation is geared to identify how to bridge that time gap and get the most useful data out of your people and your systems.
Mhm. And I think both you and I, Adam, both see kind of similar, I guess, reporting breakdowns or, where things might not be lining up with one another as far as, how the operations team is tracking their cost, managing their estimates. And then you have the accounting team that's looking to produce the monthly WIP for, whether it be just simply for the accounting team or the banks or the sureties. So we want to make sure that all of the um, all the reporting is done in a way that the teams are, like Adam was mentioning, we're not just simply combining or organizing the what of the information, right? If we're spending too much time um, focusing on the information and building that information as opposed to why the reports look as they do, and we can get more out of everything from the financial statements to the WIPs to the forecasts, to be able to produce those accurate reports in a timely fashion.
Right. Getting
Hit
some notes
forward.
on here. It says we're getting a little bit of an echo. Not sure if we can do much about that. I'll try to talk quieter.
Let's see. All right. Is this any better? Just real quick. Mic check, mic check.
Feedback, no. No echo. Okay. So
Sounds good. Thank you, everyone. We want to make sure everyone can hear us just fine. So appreciate it. So Adam, I guess when we're looking at the difference between the operations team and the accounting team, where do you see kind of the disconnect or maybe where some of this reporting breaks down between the two areas of the company.
Yeah, absolutely. I think the biggest, and I hit on that in the very beginning, the biggest breakdown is finance gets information. I'll use payroll, right? Because I think payroll is the easiest thing for project teams and finance teams to relate to that are on this call. Payroll is happening every single day. Payroll gets entered in on Monday, on Tuesday, on Wednesday. Now it's being reviewed, or it should be getting reviewed by the project managers and potentially getting sunk into the accounting system every single day. Uh, but that doesn't necessarily hit your ledgers, meaning it's not going to hit your cost reports until the following week. So on the end of your payroll week, if it's Sunday to Saturday, let's say you process payroll on a Tuesday, funds come out on a Wednesday. Most accounting systems are going to get an upload or however their payroll interfaces between payroll processing and the ERP, the accounting system. That might not necessarily hit the ledger until a Thursday. Now, if you're a big company, even a small company, because it's material for a small business, you just lost 2 weeks of time from the first entry date on Monday to when your finance team is seeing that first entry of payroll for the prior week. Decisions could be very quick in a situation like that, meaning if you are looking at your cost reports timely, you are going to see every week what's going on in your job. However, your project teams and your general supers and your superintendents, your foremen, they're already a week ahead of that. So there's this inherent time gap between finance, which is this first category here, financial discipline, and then project level visibility. Project managers are managing this. How many guys do I need next week? How many guys do I need in a month? They're looking forward where finance is always in arrears and bridging that time gap because there's really two things in a business. You have time, and that's the time that it takes to figure out the what. What is my payroll? What is my overbilling? What is my underbilling? What are my change orders? There's time that goes into the what. And then there's also time of figuring out the why. And the why is what allows the business leaders, whether it's a project manager all the way through an executive, to be able to make a financial decision that will trickle down to the bottom line of that business. And that's one of the biggest problems that we see across the board that we'll talk a lot about within this presentation is that time gap and the risk of the money that's at risk during that time gap.
Yeah, and the why is what we want to say is more of the proactive look at the company, and the what being more of the reactive, right? Being able to have it in a timely fashion, make those
Right.
decisions quickly, whether it's cash positions, whether it be forecasts for jobs to manage, where we're at from a revenue recognition side of things. But as we look at, who we're gearing this towards, right? Three distinct groups, and we'll talk to maybe some other groups that might be inherently involved in this, but the construction executives, so your C-suite individuals, accounts, managers, controllers, or I guess that's more of the financial managers. But then we also have our project managers, and those more responsible for the actual jobs themselves, right? So as we're looking at these three different distinct groups, everyone kind of has their own responsibilities and priorities. We want to make sure that from the executive level, looking at it from a company wide perspective, the financial managers doing more of the data entry, managing closer with the actual data on a month to month basis, and then combining that with the details, from the estimating team, the project managers, even the supers, as it relates to cost management, forecast for the job, and we'll get into why change orders become such a big deal as it relates to these processes as well. But I guess when you think about this, Adam, which of these three groups here, when we start seeing bad hygiene within a company, where do you see that blame get tossed to first?
Chuckling a little bit because I hate to put this happens in every company that I get involved with and and even my previous experiences between running construction companies and owning construction companies. Everybody likes to point fingers, and it's not necessarily that teams point fingers because they don't want to do their job. I'm sure we all have that. That happens within our companies. But a lot of it is just not everybody has the same information. And I think that creates a lot of disconnect where executives are looking at things one way, where a project manager is looking at things differently than a finance manager. A project manager, and this is where software comes into play, is if everybody thinks of the software that their project teams use, a lot of times it's completely different than the software that the accounting teams use. So the way a project manager looks at their data and analyzes where projects are financially is very different. And like I said, a lot of that comes with how project managers think because they're always thinking forward. They're not thinking in arrears. They're not thinking about what they had for breakfast 2 days ago. They're thinking about what they're going to be doing for breakfast next week. So, there's a difference in that thinking, and that's where a lot of these disconnects tend to come in. And it's not that it's people are doing their job wrong. It's just there's a disconnect between how everybody looks at the data that's there.
Yeah, and I think when we start looking at some of the what we hope everyone gains from this is a overall clear picture on how these different departments operate, how we can best utilize the strengths of each of those departments, where we can get better, more accurate, timely information from each of those departments, and ultimately being able to explain the why to everyone. Why are we forecasting things this way? Why are we experiencing profit margin fade or gain? I mean, it's not always bad, right? We want to know obviously what we can do to improve, but also what are we doing that's helping the projects, and how can we replicate that? And I think there's plenty of systems out there that and processes that can say, here's a snapshot of our jobs, here's what we're doing well, can we do more of that? But it all starts from just everyone doing their part for complete and as clean a books as we can possibly get. And I think starting with the operations team providing clean estimates to correct job cost entries from the accounting team, and ultimately providing those finalized reports as it relates to the WIP or just project summary reports as well.
We'll talk about a lot of these bullet points in the next future slides on here, but one of the big takeaways of this is knowledge, and you hit on it, Denver, which is knowledge is power. And an executive, the more knowledge that an executive has on their business and where, project managers, we all know the term sandbagging. There was an article in Construction Owner magazine last week about it. And, it was like a 3-page article about sandbagging. We all heard the term. It's kind of like a grin term when you hear it. I'd rather have more knowledge of what job is being sandbagged as an executive, because then I can make a different decision on the overall the explanation that I'm giving to my other stakeholders within the organization versus not having any insight into that whatsoever. And that's kind of what this will bring together with when you really understand your financial picture and everything's talking to each other consistently, you can have that knowledge to make really beneficial decisions.
Yeah, so we'll break it down a little bit. We'll talk through these different cycles, where there could be some pitfalls in relation to some of the transactions that take place throughout the month, and then kind of how we can support those cleaner books, how we can make sure that we're managing these projects or the finances as a whole, just to improve everyone's process. And then we'll make sure we leave some time at the end, 5-10 minutes for Q&A. If you guys have questions throughout it, throw it in the chat. If you want to save them for the end, we'll be more than happy to answer those as well. Okay. So first section here, just the financial cycle, right? How we can look through the different steps, right, for each month, how it starts from estimating, how it ends up, to the WIP and those executive decisions. So each one of these steps, we want to make sure that we're focusing on, once again, the why, being able to produce the why, as opposed to focusing on the what, right? So when it starts with the estimating team putting together the bid, the budget, and how we're going to break down these costs for, the upcoming project, to capturing those costs through payroll, through our AP transactions, equipment usage, inventory that we're sending out to the jobs, and making sure that we're capturing those costs in a similar fashion that the estimating team is breaking it down. Because what we've seen, and Adam, I'm sure you can attest to this too, so many times that we have an estimate that's this long, we break it down into costs that is this long, and now we've got buckets of unallocated budget here, costs being captured here, and now we can't compare apples to apples because we either have a too detailed estimate sheet or a too detailed job cost breakdown. So just trying to match up and figure out what kind of structure in place yields the biggest benefit from, just a cost capturing perspective, right? And once we have that in place, now we can start forecasting out our jobs in a way that makes sense from, how many hours can I allocate to this project for this week, next week, for the next month, right? Because like you mentioned, Adam, the PMs are doing a great job at knowing what they need from a resource perspective on those jobs, but being able to track it, I think, becomes the biggest bottleneck to making sure that everything is being able to compare those apples to apples, right?
And that's a good segue into kind of a real life example of how this all plays into one another. So, just this kind of chart that we have in front of us, estimating through executive decision making, the estimating department, you can have the best financial statement, the best executive oversight group, and the best controls in place in the planet. The estimating department is really the first line of your defense in any business. They know that this pen that I'm holding right here, if you go to Staples, it's going to cost $2. If Walmart is selling this pen for $10, you're not going to buy the pen at Walmart. You're going to go to Staples because it's cheaper. That's the market rate for the pen. And, not every construction project comes down to the cheapest price, but just like how you're selling a widget, if you go to a BMW dealership or a Honda dealership to buy the exact same Honda Civic over here in Massachusetts that you're buying in New York, it's a market rate to that car. The same thing with your construction jobs when you have multiple bidders bidding on work and the owner, whether it's a low bid environment or a closed shop, negotiated bid environment. The estimator's job is to know what the market price is on that project, which then goes to the project team to execute on that market price. And we all know that maybe the estimator missed something or there's something wasn't in there, but again, knowledge is power. The estimator came up with a market price, you reviewed it, you submitted it. That project manager now needs to manage that job to that estimate. And the more information that project manager has, the more successful that project manager will be at managing that job. And that's where the finance department comes in because project managers have 100 things going on. They can't be sitting there tracking purchase orders and tracking, all right, how much payroll did I have today? How much time do I have left on this project? And that's where good systems come into play, which is what Denver's referring to on this cost capture, which is if you have a job, and we all know that cycles of work, you have your backlog, it goes up and down. You might have a tremendous amount of guys on staff that you don't have a home for the next, 2, 3 weeks. What do general supers tend to do? They dump the guys in the jobs that they think are jobs that have enough room in their budget to absorb that cost. But they think it, they might not know it because they're too focused on the what versus on the why. But if that job has been bleeding and nobody really saw that, and you spend 2 weeks of payroll because you dump guys on that one project, now you just exaggerated the problem that you had. And we'll get into kind of the waterfall effect of that. But I think this is a good point to think about where, and Denver, you can probably hit on this because you do a lot in the software and technology space, which is, all these different areas here between estimating all the way to executive decision making. Where do you see your clients like using Excel and using multiple systems here every day for tracking all of these things?
Yeah, and what we typically see is, it'll start off with, an estimating platform, and there's a million of them out there, right? From Procore to HH2 to B2W, all the different software out there for estimating, right? Getting that information into the accounting system, whether it be through an export import, whether it be through a direct connection, but really all the core information is going to be stored within the accounting system, right? And all the accounting systems out there do a great job of tracking and having the ultimate data points in the system to be able to do my time entry, to make sure my purchase orders are in there, make sure my costs are being captured. Where I think we see a lot of struggle with is, like Adam, what you were saying with, outside systems, whether it be Excel, whether it be some other analytics tool that heavily relies on a custom build out or something to the tune of that. So all the data is within the accounting system. What we like to do over here at ProNovos is be able to take all that information, bring it into one system, so that way not only do you have all those end data points, but you're able to make actions and control things like your cost to complete, your projected margins, your WIP schedules, your revenue forecasting. So that way, not only are you given everyone kind of one place to share all that same information, but now it's in a pretty easy to understand environment where we have all these features built out already. So that way, through each one of these different steps, everyone's completely, in the know on, how the jobs are performing. We're tracking. We can, look at these different metrics. Hey, we estimate at $50 an hour. We're running at $55 an hour. So we know even if we hit our target hours on a job, we're going to be over on cost. So being able to catch some of that ahead of time is really what we see to be extremely successful as far as from a data management perspective, but also, having that one source system that ties all the different numbers together, I think is really what we see be ultimately the most successful for each one of our, contractors that are using the system. That way, it just takes the guessing out of it. It takes the time to generate these spreadsheets. I can't tell you the number of people who joke and say, we have a spreadsheet for this, we have a spreadsheet for that. And it really does add up eventually with just, combining all that information, which I think can lead down to where some of these, different areas of the financial cycles kind of break down, right? When we start looking at the cost capture, right? Taking the time to get those committed costs in the system, or, what do we have left for materials or subcontracts on the job? Are the labor hours being accounted for in a timely fashion? So from the data entry, I think we see a lot of reactive nature when things aren't being recorded or managed in a timely fashion. And I think, Adam, one of the things you had mentioned previously was, some of the committed costs, the change orders being kind of left out there. And now we've got all this extra stuff that nobody accounted for previously. Now our books are kind of all over the place, right?
I'll give a nice example I think that everybody can relate to. Again, it goes back to that because the purpose of this is not just to point fingers at one department and say, oh, well, it's the PM's fault, or it's the accounting department's fault, or it's the software's fault for not being set up correct, whatever, right? We had a very large contractor that was doing work and they consistently had fades on their jobs. And this is a company that had like 600 employees. So this was not a small organization. They had a lot of checks and balances. They had a lot of people in accounting, a lot of people checking the jobs, like project accountants and PMs reviewing it, project executives overseeing it. Every single year they would have problems with jobs fading and they could not figure it out why. So met with the owner. He kind of laid out his struggles. So I told him, I said, let me go to a project exec cost of complete meeting with your accounting department sitting next to me. I want to go through and figure out what's going on. So we went in and we sat down and so we start going down there. So this is a vertical contractor. So they're a GC. They build a lot of targets and that kind of those types of projects. So ground up. And the project manager is going through his routine, and the job's getting completed, almost completed. They're going through Procore was a system that they use. They're going through Procore, and the PM says, "Yeah, we're totally done. The job is 100% complete. We're done." So right next to me, I have the accounting department, the controller, and she's in there, and she puts 100% complete on the WIP, releasing the profit that's on the job and the cost of completes on the job. So I looked at her. I said, "Well, why did you have $800,000 of cost to complete on that? And she goes, I don't know. The project manager said it's done. I said, but what is that $800,000? Why is it not in Procore? Why is it not on the project manager's platform? And stopped the meeting, went into, they used Sage. We went into Sage and we went through the purchase orders that they had in Sage. And it turned out that the roofing sub never sent in the invoice. So in the project manager's mind, the roofing sub is done. They've already come out, they've already done the work, they're already off the job site. The PM's eyes, that subcontractor is complete. The job is done. But in accounting's eyes, you have $780,000 of an open PO that has not been received yet and entered into your cost ledger, and you don't want to release that profit. You can do one of two things. You can accrue the cost on, or you can wait for the job to come in. Like that's your internal accounting process. But you can't release that 800,000, or else you're going to now artificially be bringing in profit that's not there. And then a month or two that goes by when that sub decides to send in their rec for final payment, now all of a sudden that job takes a fade and everybody's scrambling. Who screwed up? Everybody's pointing fingers at one another. And that's just a great example of that time lag of how a project manager looks at their day. Everybody's done. We're not on the site anymore. We're complete versus how accounting looks at their day, which is, wait a second, we have open POs that we haven't been invoiced for yet. Hey, PM, could you call that roofing sub and get that invoice sent over to us? Those are the open lines of communication, and that hygiene and that knowledge is power kind of thing, and identifying the whys versus the whats that we're trying to emphasize in this meeting. I think this is a great way to emphasize it on that cost capture and late entry trap.
Mhm. Yeah, and that's exactly right with the open commitment. Now you're showing all this excess profit, let's say in June, invoice comes in July. Now we've got all these, unexpected costs hitting the books. Now everything looks, our revenue per month, we're having to skew the numbers from one to the next. And you know, in a similar fashion with the change order side, same thing, right? Like if we're plugging in change orders only when they're approved, right? And we're only tracking those as they are actually approved, as opposed to tracking them when they are pending, or what's sitting out there as unapproved change orders. Now we're not getting the full picture of, if today my contract is 500,000, but I've got $200,000 in pending work. When we're looking at things like the WIP, when we're looking at our revenue for the year, we're not taking into consideration, if those do get approved, how those are going to affect the bottom line, right? Because that'll create either a huge, what would that be, increasing, or if everything's, going up at a certain percentage, maybe now we're underbilled or overbilled based on, these unapproved change orders. And if we don't know, if accounting has no idea of what those pending change orders are, we don't have a way of following up and saying, hey, we've got pending change orders that have been sitting out there for 90, 120, 160 days. Do we need to follow up? Have these been approved? Because maybe the PM, to your point, Adam, has already, factored that into the forecast, or has already planned that out for a schedule. But on the books, we don't have those in the system because maybe they're just tracked in Excel or on a piece of paper of, hey, these are the outstanding change orders for all this additional work. So, from
I see a lot of change order logs that are, and every project manager has their own way of doing things too. So, that's the other piece that kind of we hit on in the very beginning of all these Excel spreadsheets and different systems that do different things. A lot of PMs have their own way of tracking change orders, and it could be in a log book, it could be in an Excel spreadsheet, but it's the lack of visibility that comes back to the executive side when you're looking at your financial, you're looking at your underbillings. That underbilling number, I cannot say, I don't have enough numbers to count to say how many times I get told an underbilling is because of work done on an unapproved change order. But then once the change order gets approved and they're still underbilled by $1 million, everybody puts their hands up and says, oh, well, I thought that was the change order. So like that's where the knowledge piece and really identifying what your costs are telling you. That's the purpose of the WIP. The under and over billing is a mechanism that's used to identify the risk on the job. And, just saying that you have change orders, but you don't really completely understand the value of those change orders, that could really be allowing or putting an executive decision in a different position than it would have been made otherwise.
Mm-hmm. And how do you think that is being affected when a contractor goes to the banks or the sureties and they have these huge underbillings? Like, how does that impact their financial decisions from that perspective?
So sureties for everybody on this call who's a bonded contractor is probably gets like goosebumps when the sureties are asking them questions about this. You get the surety will lose faith very quickly in a company when they start seeing the wave, right? When they start seeing that the executive went over the whip and the financial with them in Q1, and all the underbillings were a result of unapproved change orders. Q2 comes around, they're still outstanding. Q3 comes around, and now the job fades, and then the audit gets done or the financial gets done in December, and it's like the job fades even more, and that surety just loses faith in the ability of the it happens with banks, but I feel like sureties are more prone to pick this up because they want the numbers more frequently. They lose faith in the character and the ability of the contractor to estimate their projects. I have a lot of jobs and a lot of clients that if that surety knows that you can estimate your jobs and they know that you're very accurate, where you're not getting that wave effect, they will go and they'll extend credit when a normal situation might not expect credit to be lent when they know that you really are in tune with your numbers and you don't have that wave effect. And that's all that knowledge. The more knowledge you have, and again, going back to what I said before, you know the jobs that are going to be sandbagged. You know what's going to cause gains in the future. Those are the areas where sureties love for a contractor to come in and say, yeah, we had a contingency on this job. We have exceeded our expectation. It came in at a 10% pickup. That will add so much credibility when you start seeing the whip going up versus going up and down that that will allow you to scale and grow, bid on bigger projects, and eventually get to that next volume level that you're trying to get to within your organization.
Mhm. Yeah, and just having those clean management of the whip, the over and under billings have become, the biggest criteria for a lot of clients that I've worked with over the years is just being able to take a look at where the jobs are. Are we managing our costs? Are we not only covering our costs, are we billing for enough? And then, when you start looking at it from a cash flow perspective, are our billings exceeding our costs? Is the cash coming in exceeding the cost? And I think that plays into some of the decisions where when we start looking ahead and forecasting what those costs are going to be, so that way as we're predicting what our billings or where we're forecasting our man hours or just general costs in the system, you know all of it boils down to being proactive, making the correct call. Because when we're looking at from a forecasting perspective, project managers have a very good idea on everything that is going on with the job. We just need to be able to provide not only them, but the accounting team with as much information, like you said, Adam, knowledge is power. So the more information that they have about their jobs, as while they may not be finance, part of the
Yeah,
finance team,
right.
but everyone to some degree is, right? And understanding the cost to complete, understanding those percentages of completion, how they affect the revenue, and how we're determining how much we need to be billing to stay cash flow positive, or making sure that those billings are getting paid for in a timely fashion. But I think all things considered, when we're looking at those forecast numbers, making sure that everything is done in a timely fashion, I think just having easy access, having visible information is really what's going to give them the best opportunity to do what they do best, and that's manage their projects, make sure everything's being done in a timely fashion. But I guess, Adam, for you, for what we're looking at here, when we're not getting those timely forecasts into the system, how does that eventually, affect what we're seeing on the finance side?
So I think one of the big risks with it is the PMs generally will do a forecast. If you ask a project manager what you forecast, they'll do it and they'll get the forecast done, but it's again going back to the information that they're utilizing and how does that backfill into what the finance implications are of that forecast is where I think there's the biggest fallout. Meaning, using that first example I said about this roofing contractor that never sent in the invoice. Yeah, we're done, we're done, we're done. but that came in. Another issue that I see a lot on these forecasts from the project team is they will, not every project manager knows what the true cost of labor is. So they'll say, okay, well, I know my prevailing wage rate is 75 bucks an hour, right? So they're just going to use a $75 an hour labor rate, and they're going to say, okay, I got 100 hours left, so that's 7,500 bucks, and that's what my cost to complete is. But because of that lack of visibility into what the true cost of labor is, does that labor have your FICA, FUTA, SUTA, workers' comp, the fuel cost, the truck cost, all the other things that follow that guy along? That 75 might turn into $140 an hour. And if they had used the $140 an hour rate, because again, it's not the PM's fault, it's the communication and the understanding, then that forecast would have been $15,000 or whatever it comes to versus the 7,500. And that's a very small dollar amount, but if you multiply that by 1,000, you can see how big these issues can become very quickly. I think that's one of the biggest inconsistencies that I see is that the lack of burden, if you will. A lot of project teams use a base rate or they're told a rate, and that rate was what was used 20 years ago. And it never was updated for current rates. We all know insurance goes up a lot every year, umbrella, GL, workers' comp. So, those things need to be tracked, analyzed, and communicated to not only your accounting department, your estimators, your project managers, because again, this pen is $2. If workers' comp goes up by 10% and you can't pass 10% off in your job, well, that 20% profit margin that you told accounting just dropped to 18%. So on your WIP, you can't carry 20%. You got to carry 18% to cover that increase in workers' comp. Like it's not a matter of chasing the top line. It's a matter of really understanding your cost is and how that's being communicated all the way downstream.
Mhm. Right, right. And those become, like you said, compounding issues, right? Like when we started out at some of those costs coming in late, now costs are, quietly growing from one Costco to the next. And, if we don't have the budget broken out in as much detail as we need, now we've got all these kind of mismatching line items where I don't know what our cost to complete is because we didn't estimate at that detail, or we're only capturing the costs down to, more summarized version, electrical instead of, panels and fire alarms and lighting and, everything else. So, when we don't have the visibility, when we don't have the, similarities with how we want to track the information versus how we're actually getting the information from the field, makes it pretty tough to provide those forecasts accurately if we're not doing our due diligence on the front end of making sure that everything is costed accordingly. And then ultimately that's going to drive, some confusion or more questions when we get to the WIP review. What's my true percent complete for each of these? Well, I don't know. We've got cost here and cost over there. And we'll shuffle it around and make some sense of it. But, I think it's creating additional work for each of the different departments to focus on the what, right? When we have those processes in place, when we're capturing costs in a timely fashion, we've got it broken out to the same level of detail. Now, okay, I can see my budgets, I can see my actuals, I can see what our open committed costs are going to be. Now I've got a pretty good view on it. Now explain to me the why, right? Explain how we've gotten to this point. Where are we saving money? Where are we expecting some profit fade? Which ultimately at the end of the day is going to affect those overall financial reports. And, when we start looking at cash positions, if anyone's doing a 13-week look ahead on, where my cash is, what we're billing, what cost do we expect to come in from payroll or all my subcontract invoices that need to get paid out. It just creates a very fuzzy picture overall. And, each step along the way just kind of amplifies each one of those last steps in this chart here.
Denver, just this is probably a good segue to talk a little bit. I mean, there's so much technology today, and I'm sure everybody's getting things thrown at them left and right in terms of different packages, and they solve the problems of everything. How does this identification of the why in each one of these, like how could software that you see out there that you guys use, having the right software help things. Like I know everybody has Microsoft Office 365. I see a lot of companies shifting over to a Power BI model where they're utilizing Power BI to customize certain analytics to get to that why faster. How do you guys interpret that from your standpoint with the solutions that you guys have to be able to streamline some of this?
Yeah, because the way that we organize all the information, since we're pulling it all from that accounting system and with the help of, the project team providing forecasts within our system or notating the why, right? It's not just, hey, my projection went from 12,000 to 10,000 or 12,000 to 15,000. Now we can start qualifying those projection updates with root causes or additional notes. So that way, when I'm going through project review meetings with each one of the project managers, I can pull up a list, say, okay, for this job, here's each of my cost codes. Here's each of the adjustments that we had this month for projections. Here's why we made those adjustments. When we start looking at that across the board, whether it be for one job, whether it be for all the jobs for a PM or just every job that's currently open, now we can really start understanding where those profit fades, profit gains are attributed to. And I think that's the biggest benefit I've seen for, managing those jobs. But also just taking the time out of customizing a solution. You mentioned Power BI, you've got all the analytics and charts and graphs, but it's, to some of those systems, it's a extremely manual process or having to sit down with people to build out all the reports and dashboards that you may need to have to make those decisions. So we try and take as much of that out of the equation as possible by having, pre-made dashboards that as soon as you plug in your accounting system to it, it's got all the data points pointed in the right direction. So, time to value is the biggest thing, when we show off the platform, and anyone who's interested in looking at ProNovos, like we can say, hey, we'll connect your ERP, we'll give you a spin in the system with your data and, really put our money where our mouth is. So I think that's where some systems like ProNovos can really shine is, having that immediate access to all the data that is in the accounting system without everyone needing to be in the accounting system, right?
And that's big. I mean, we all know staffing is tight. We're putting more and more responsibilities on our teams. Project managers have more submittals they have to send out. Change events are happening constantly. You have the older generation now is starting to leave, which is taking a lot of knowledge to be able to identify those change events quicker. So it's putting more research and more attention on the younger staff that are now coming in, taking over these jobs. So and the same thing in accounting. Accounting is an overhead expense. It's looked at as an overhead expense in a lot of businesses. A lot of businesses don't want to invest in 15 accountants to do all this work. So in today's world, in an ultra competitive environment with a very difficult staffing environment, as business leaders, we need to start looking at what technology is out there and how we can utilize it to make everybody's lives easier. And not every technology that's on the market is good technology. You can invest in 20 different platforms, but now you got to touch 20 different things in order to get an output that you want. So again, you're taking that, you're trying to solve a problem by adding more touch points. And that's something that's important for everybody who's a leader on this call to think about that of when you're looking at your teams and how long are they spending identifying all these things and putting all these things together. That's valuable resources that could be utilized to go towards another task that's more valuable within your organization.
Yeah. And, everyone's managing more and more projects. Everyone's busier than ever. It is what it is. But, if you can cut down on a lot of that back and forth or just creating some of those efficiencies, I think, technology can be the spot where you do be able to get, good management from the operations team and, provide those insights, and everyone can spend less time, on the computer and actually running the jobs that they're responsible for. Right. But, as we're looking through kind of that downstream impact here, the three things that, and we've kind of touched on this to this point, but the three big things being, managing of the WIP. Is the over under billing correct? Is that affecting our profit margins for each of the jobs? And, ultimately, when we don't have a good sense of percentage of completion, or, a good way of forecasting what costs are coming in, now we're starting to maybe leverage the line of credit, where maybe in some scenarios where if we had a pretty good picture of where we think each of these jobs are going to go, and we have a way of saying these jobs need these resources, those jobs need these, now we can kind of hopefully cut down on, we get to the end of the job, and a big $780,000 subcontract invoice comes in. Now we've got, hey, we said we were done, why are we cutting a check for $780,000? Right. And I think to that, I mean, where do you see, Adam, for of these three, do the biggest surprises or biggest bottlenecks come into play from, the WIP, or just tracking the margin, or even just the cash flow component of it?
I think it's a lot of it goes back to that over under billing and the time it takes. And I don't want to say that every company only does a whip at the end of the year when their CPA comes in, but if a work in process schedule is being completed on a monthly basis and you have to wait for all your billing to get done, all your costs to get entered, and you don't generate that whip until, and we're in June, everybody's closing June out now. It's July 15th. So if the financial's not done until July, the end of July, July 30th or the beginning of August, if you have a job that was underbilled and the expectation was that it was underbilled because of a specific reason, and things have transpired on that job, like us general super keeps staffing that same project because they needed to house staff, that's cash flow that now is deteriorating that business because that decision was not made sooner and the visibility into that whip was not seen fast enough. That's where this distorted whip impacts. I don't want to say margin fade's not important, but cash flow, because that job is never going to recover that money. And if, let's say, it's a prevailing wage job, I'd rather you guys pull your guys back to the shop and say sweep the shop floor for 25 bucks an hour versus working on a prevailing project for 75. These are all the decisions that business leaders are making every single day, that having that visibility of what money is on what project and how much is available of really will impact that cash flow. But it all starts with the visibility into the projects. If you're flying blind and you don't see your whip until every quarter or every year, and you're not understanding what's going into the whip, then you can have, what's the word? It's you're managing your checkbook is what's happening. You're running your business based on a checkbook, and you're lucky that you have enough cash in there to run the business. Um, but as people are getting older, and this is a succession note for everybody to think about on this call, the goal is not to be doing that every day of every minute of your business leadership. You don't want to be looking at the bank account every day. You want to be able to manage the business and work on the business and not in the business. And really the way to do that is to train your teams to identify these things quickly. So then the leadership can eventually transition out and get new leadership in. And like that's how all of this plays in. And it's all a learning lesson and an identification lesson for everyone to be able to see things be as quick as possible and make good financial decisions on them.
Yep. And having that accurate whip, we've touched on it pretty good, but when we're looking at it from a project management situation, right? When we're looking at those, margin corrections, unrecognized change orders, costs being, coming in later than we expected, it ultimately boils down to, do the PMs have the visibility in understanding not only the information that's out there, but having access to be more proactive at the end of the day, right? Being able to see these things ahead of time, so that way we can prevent those questions from coming in. Because everyone wants to be responsible for their job. They also want to cover themselves for any questions that leadership may come to. But so that way, when we have the ability to provide management with the why behind things, as it relates to why are we over underbilled. Hey, we've got these 3 jobs have cost this month that we haven't billed for. What's the reason for that, right? Are we just wrapping up and we're already at 100% build, and there was just some final touch-ups that needed to happen? Or were there change orders that just never got approved and sent over to accounting for WIP purposes? But at the end of the day, when we can get the project management team in sync with the accounting team, it just makes life a whole heck of a lot easier.
And one, I know we're kind of butting up on time here, but just another thought on this is on an underbuild situation on a project. This is an example of how valuable this could be if things are set up correctly. Uh, I think a lot of municipalities don't pay police unless you pay the police first, meaning you can get the invoice from the municipal officer for a project. You can enter it into your accounting system, but you can't bill for it and get paid for it until you show proof of payment. So when we were going through the WIP, there was a job that was the underbilling was not getting recovered. And having strong data, we were able to very quickly go into their cost structure, very quickly identify what cost item was not billed out and had cost on it that was still sitting there. So the communication to the outside world was, yes, we know that this job has been underbilled. We know exactly what the underbilling is. We know what item it's isolated to, and we know how we're going to correct it. And when you look at their costing structure, that job did not change in underbilling from the moment it was identified for another 8 months later while they were going through waiting for all the cash flow to come in, because it was a very cash flow constrained organization, for the cash flow to come in to bill out the police and pay them. But that allowed the comfort level of every single time that WIP is done to see that underbilling. We knew exactly what it was, and it never changed. It didn't go up. It didn't get worse. The job actually got 100% completed, and that underbilling stayed exactly the same. It eventually got billed out, and we proved out to the outside world that we understood the cost structure. Now that allows, and I think we talked about having buckets, or maybe Denver and I talked about having project managers seeing buckets that are dumping grounds for cost code. So it's hard to identify sometimes where those costs are if all the labor and all the general conditions are just going into one item, and that's just showing a negative cost to complete. But then all the other items have budget that haven't even been touched yet. So if nobody's looking at that until the end of the job, it's hard to identify where that money is and where it's sitting. So like that's just some of that good hygiene to be able to manage through these things and give that accuracy, and your project managers the ability, frankly, to make those good decisions.
Yeah, and we always, everyone debates, is it a people problem? Is it a software problem, right? And I don't think necessarily it's always a people problem, but when we look at different technology to incorporate better practices, better technology is going to give you more visibility into everything that's going on, right? So that way we can really call out these things ahead of time. We can be more proactive. We can have the discipline with all of our processes, but with the right technology, it's going to only help, everyone involved for, from your side of things, Adam, making sure that the books are clean, right? Making sure that revenue is recognized in the proper fashion, making sure that cost forecasts are done in a timely fashion. But yeah, I guess
It's
from
the visibility. I think it all
yeah,
comes down to, again, the estimate. You know what your estimators are bidding on the job, and you need to be able to identify when the job is progressing, where that leak, if there is a leak, where it's happening, so you can make a decision on it. I mean, that's what it all comes down to. And no estimate is perfect. No job is perfect. We know jobs are going to change by the minute. So it's just how are you making decisions by the minute in order to address those changes to either maximize your bottom line, or reduce the financial impact of whatever loss that potentially is happening.
mhm, right. Yeah, and with that, having the system in place that gives you kind of that real time information, we can trust that all the WIP numbers are up to date, accurate. We can start looking into the details of what makes up, or not only what makes up the job, but why is it fading this way or that way, right? When we don't have good technology practices, late entries or no visibility into things, now we're scrambling to combine all this information, and really just spin our wheels on generating the reports rather than focusing on why the reports are the way that they are.
Right.
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 So I think overall things to take back to the team, right? Just making sure that we've got good visibility between accounting and project teams, right? Those cycles from the estimating team, when we talked about the 6 steps there, from the estimating team providing good, clean estimates to accounting, providing, cost entries that are being coded to the right way, and project management being able to provide those timely forecasts in the system to generate those WIPs, to generate the updated financial reports for the C-suite individuals, for the banks, for the sureties. It's all intermingled with one another. There's no one person to point the finger at. It is a team effort. And I think that's ultimately what we want to see from all contractors, right? Is the ability to take these processes, take these kind of, different areas of each of these positions, and, ultimately have everyone just be better, right? Like
Nothing happens, nothing in an organization, especially in construction, nothing in an organization should be happening in a vacuum. Your estimating department is not just the estimating department. Your accounting department is not just your accounting department, and your operating department is not just your operating department. Estimating needs to know what's happening with current cost structures, labor rates, indirect costs, equipment costs, whatever it is. Accounting needs to be feeding them that information on a regular basis. It's not a set it and forget it cycle. Your project team needs to understand what the estimating team is feeding them in terms of the data and what the estimating team saw in the original scope. And then your finance team needs to be able to get that information reconciled out and understand what the forecasts are in order to give that data up to the executive group for them to make the decisions that they need to make on the business. So, it's everything is a circle. It all comes back to every department. They all need to be constantly communicating constantly to make sure that changes that are occurring within the organization are being analyzed as to why, and decisions can be made timely.
Right. Exactly. Yeah. And I think we can take the last couple minutes here. I know we're running up to time here. So if anyone has any questions, comments, thoughts, the vacuum kills.
I like that.
Yeah. So please throw them in the chat for either Adam or myself. And I'll throw this poll out there just in case, if anyone is looking for, any sort of solution out there for, better cost management, visibility, reporting. If there's anything that, either myself or Adam would be able to assist with, we're happy to connect with anyone and, share our expertise as well.
And feel free, if anybody has questions or has any follow-ups, I just put my email in the chat. Feel free to reach out. I spend all my time in advisory, so there's no question that's a stupid question. My time doesn't get built in with other types of engagement. So I do what I do because I love to help contractors. I love the industry. So feel free to reach out if you guys have questions. I'd love to hear what they are. It could be an hour phone call, and if it gives you a gold nugget to take away, happy to give it to you.
Excellent. We'll give it another minute here just in case anyone's typing up a question in the chat, and then we'll wrap things up. And for everyone that joined us today, we really appreciate you guys joining us for our discussion today. I think I speak for Adam, and we're here to help. At the end of the day, we want to see everyone succeed. We want to see the best out of all of the contractors that we come into. So if we're at an event, any of the local events going on or any of the national conferences, we'd love to see you guys, meet you, talk through just general questions or anything like that. But we can we'll be happy to talk things out. But if nothing else, not seeing any questions coming in. So if anyone does, please feel free to reach out. But Adam, once again, thank you for joining us. You're awesome.
And Denver, thanks for hosting. Appreciate it.
All right, guys. We hope you have a good rest of your day, and we hope to talk to you all soon.
Take care.
All right, take care.